Hello and welcome to my Hargreaves Lansdown Stocks and Shares ISA portfolio update for September. I hope you're all keeping well. I'm actually really upset because my kids are back at school and the teachers are having to deal with and complain about the heat, while I laze about in the garden, slowly converting my blood type to Ben & Jerry's. If anyone asks though, I'm just saving my strength when I have to pull them out the rubble of their collapsed school. If you're new here, then this video is part of a monthly series where I take a look at the big financial news for the last month and see what impact that had on my portfolio. To see future episodes or any other content I create, then please hit that subscribe button so you don't miss out. So what was the big financial news for August? Globally, we saw a running theme continue, with many nations still trying to rein in inflation while trying to keep interest rates as low as they can. Unfortunately, those rates are still high, and with such uncertainty ahead, it didn't lead to a lot of market confidence in August. The S&P 500 failed to make any major significant gains in the month, and with September being a historically bad month for the index, it looks like this year is unlikely to buck the trend. In China, we saw a much bleaker picture, with weaker than expected retail sales reported for the month of July, and yet another nail in the housing market coffin as Country Garden Holdings looked to be in serious trouble. Evergrande, a company that has struggled to keep out the news for all the wrong reasons, also looked to be in trouble again. The company saw a massive drop of almost 80% in its share price after they posted a loss of $4.5 billion for the first half of the year. As bad as that sounds, it is an improvement on the previous year, which was around a $9 billion loss for the same period. The fears for China's economy rippled out and hit a lot of other international markets, as so many other countries rely on China for production of their products. Here in the UK, we did see a slightly more optimistic month, as analysts predicted that the base rate won't reach 6% as expected, but instead hopefully will top out at 5.75%. Time will tell on that one though. That high base rate has hit one of my holdings pretty badly though, which I'll get to in a minute. Before we take a look at my full portfolio though, we'll take a look at what income I received in August. I received one dividend payment in August for £6.05 from my Eden Tree fund, meaning my monthly average for income sits at just over £19 for this financial year. I also received 47p in loyalty bonuses, a fairly quiet month but still not bad. My biggest holding, Legal & General, pays its interim dividend in September, so next month should be a bit better in terms of income. Moving on to my portfolio on the whole, it fared pretty well in August, sitting at 5.35% return. That was helped hugely with Rolls-Royce sitting at over 120% up. Man, I wish I'd pumped more cash into them, but hindsight is a wonderful thing, and it's still a company with some risks. My portfolio was pulled down by some of my funds that are lent towards the US or Asia. As you can see from the charts, they all dipped hard around the third week as the markets reacted to China's housing fears. Centrica saw another strong month, although I wonder how much higher the price can go. Many analysts priced them in at around the £1.75 mark, but the energy sector is a fast moving one. We saw this last year when energy prices went through the roof, although if those roofs were made from the same stuff our schools are, that's probably not that hard. Centrica are in a strong position though, with a healthy balance sheet and improvements in infrastructure. They should be able to withstand a fair amount of market turbulence. Legal & General have had yet another bad month. High interest rates have hit the company hard. Customers facing harder times have made cutbacks which have hit LGEM badly. On top of that, in August they also reported investment losses of £617 million, which was again a result of those higher interest rates. Legal & General, like all financial institutions, invest the money they hold from the financial products they sell to generate more revenue. Unfortunately, with such turbulent times, those investments just didn't pay off. This news hasn't put the board off from delivering their 5-year plan and are still looking to pay back handsomely to their shareholders. Great if you hold the stock. Their numbers still look pretty healthy too, with decent coverage for their dividends to continue, but seeing such a big loss and with a change of leadership for the company due at the start of 2024, I think I'll hold off buying any more for now and will instead just let the dividends be reinvested into the company and build up my holding that way. I'll run through the rest of my holdings briefly now. Feel free to pause if you'd like to take a closer look. That's it for today. Don't forget to leave a like and subscribe for future content. Stay safe out there. Peace.